Hey everyone, welcome back to the show. I'm your host, Nicholas Wenzel, and today I was joined by Daniel, the co-founder and CEO of LULO, a DeFi app that's built on Solana and it makes it incredibly easy to earn yield on your stablecoins with just a few clicks. In this episode, we talked about LULO Protect, which is a new feature that ensures your deposits while sacrificing a bit of the yield. We also talked about whether yield-bearing stablecoins can dethrone Circle and Tether. We talked about the current and future landscape of stablecoins, why atomic composability is LULO's secret weapon, and how the app could eventually route yield across multiple chains without making the user bridge. I hope you enjoyed this episode. Let's get into it. Hey everyone, welcome back. Today's guest is Daniel, the CEO and co-founder of LULO, a DeFi app that helps you earn the best yield on your stablecoins without any headaches. Daniel, it's good to have you here.
Yeah, good to be here, Nick. Thanks for having me.
Could you give us a high-level overview of what LULO is and then also talk about why you decided to build it?
Yeah, you can think of LULO as we like to call it like your DeFi savings app. So essentially it's the easiest, safest, and most efficient way to earn yield on stablecoins. The reason we built it is because, before LULO, if you had stablecoins, specifically on Solana, and you wanted to earn yield on them, you had to pick one place where you could go do that. Maybe that was Camino, maybe it was Drift, maybe it was Save. Back then it was called Solend, or MarginFi, or Mango, or wherever else it would be. And what would happen is the rates on these places are always different, right? They're always fluctuating. They depends on the day, depends on trading, it depends on a lot of factors. Rates are still pretty different across these apps. It's slowly becoming more normalized, but when we started, they were pretty wild, right? And so that was our main motivation: make it easier for people to get the most out of DeFi without needing to be experts in DeFi, right? I think DeFi is a really cool asset class. It's got a lot of potential for people that want to save or invest. It's kind of like a bond, but with instant liquidity and higher rates and different risk. And so making that something that everyone could kind of easily access, easily use, and make part of their personal finances was kind of our motivation. It still is our motivation for everything we build.
Yeah, that makes a lot of sense. It's a good overview. I love LULO. I've been using it for over a year now. And it's definitely the easiest way to earn yield on my stable coins. In preparing for this podcast, I heard you say in a previous interview that the original idea for LULO was actually a peer-to-peer lending order book. And you guys created it and got some volume, but you said it fell off. How did you realize that it was time to pivot to this now, what we know as LULO?
Yeah, it's a good question. Startups are very personal to the founders in terms of what they like, what their strengths are, what they feel excited about. So for us, my co-founder and I, we built this lending order book for a year, and we had it on mainnet, and we had 10 million or 20 million in there. So, it was a mildly successful early DeFi project. But for us, what we realized, the more we talked to people, the more we learned about DeFi, the more interactions we had, it was clear the big opportunity in DeFi is hey, there's this new asset class that's being created based on the crypto economy. Essentially, it's bonds for crypto economy. That's how I think of it in my head. This new asset class is emerging, it's being created. It's a net new thing that's never existed. It's independent, not entirely, but kind of independent from the traditional bonds market, which is very cool. But it's really hard to use it. Most people are very confused and scared, and so they don't use it at all. They just keep their money in their wallets or exchanges, and they're excited about it. There's opportunity in it, but a lot of people you talk to, they're oh, I love DeFi, but I don't use it. We kept hearing that, and it's that's a very odd statement, to love something but not use it. That something there's an opportunity there essentially. And so what we felt is the lending order book is a good idea. And Loopscale is on Solana, is executed it much further and better than we ever did, and I think it's doing really well. So clearly there's something there as well. But for us, we felt it was too much of a power, a DeFi power tool, and it wasn't in the right direction for what we wanted to do, which is make DeFi more accessible, easier. It was kind of in the opposite direction. It's something that's better for people that really know DeFi and want to get even more out of it.
Yeah, Lulo is super simple. I have friends that I onboarded with Fuse Wallet, and now I can just tell them, hey, go deposit in there and don't like forget about it. And it's like a few clicks and they're done.
Yeah,
So you did a great
that's
job at making it accessible.
that's the goal actually. Like that's our main goal is like people are gonna come into crypto, and I think Lulo is the best first app you can show someone who's new to crypto because there's no risk of price going up and down, right? It sucks when you get someone into crypto buying something and it immediately goes down 60%. Like that person, if they're a good friend, maybe will understand it, but if they're not, like they're gonna hate you and their crypto experience is gonna be ruined pretty much. I know a lot of people in that boat. Whereas with Lulo,
Yeah.
it's like, easy. You immediately start making money. Like 2 minutes later, you're already like have more money than you did before, right? You deposit $1,000. Next day, you have 1,000 and a few cents, right? It feels good. So for us, like that's the big thing we want to push. Like, how do we get everyone sharing Lulo with their friends? Is like this is how you actually use DeFi. This is how you use crypto. This is like the best entry point.
Yeah, let's keep going on that thread. Who is your target user profile for Lulo, and how might that change in the coming years too?
Yeah, so currently it's like Solana users, right? It's because we're on Solana. It's a desktop app. You need to use your wallet. Soulflare, Phantom, Backpack, or Solet if you're a big OG. Actually, I think that might be down now. And so, that's kind of like a barrier to entry, right? You still need to kind of know about Solana, like buy Sol for gas, have stablecoins on there. So it's definitely more targeted to like people who know Solana, have already learned about it, are in the ecosystem and like want to save on their stablecoins in like a safe way and like get good performance tracking. I think that's kind of the things people like about it. But we have started seeing like people from Coinbase that have never used Solana start using Lulo, and we've seen like a few people that have never used DeFi at all start using Lulo. And so our ambition is to push more into that, push more into like net new people who've never used DeFi at all, have never had any experiences with DeFi. And there's a big opportunity there, right? You can think of people that use Wealthfront in the U.S., right? You have like Wealthfront has like $100 billion in it, and it's pretty much just money like earning the Fed rate or maybe some bonds, some higher risk bonds, right? So these are people that are already interested in earning yield, have a lot of money, are savvy, and maybe have never used crypto, right? Because they don't trust it or they just don't know about it. And so we're currently building a mobile app, and like the goal is to get those type of people on board, right? Like get people who are very close to like, I think very close to like getting into DeFi yield and like using it, like I said, as an asset class, right? You're going to have your stocks, you're going to have your bonds, and then you're going to have your DeFi yield. You have like, it'll fit within your portfolio, right? It'll be like a third asset class that you can, benefit from, and you'll put part of your money there. That's sort of our vision for it.
That makes a lot of sense then also why you created Lulo Protect for that kind of maybe a large whale with a lot of assets, maybe wants to earn a lower yield but safer. So let's talk about Lulo Protect a little bit. You tweeted about building it. You said DeFi's first protected deposit that actually feels like FDIC insurance, but with no middlemen. Could you tell us about what Lulo Protect is, and also what was it like shipping that feature? Was it easy? Was it challenging?
It was very challenging because we had to build a whole like new risk management layer on top of our aggregation layer, essentially. But yeah, the goal of like Lulo Protect is exactly that. I think when I look at things more broadly maybe than others, or I don't know, at least I think I do. And so like I see our competition not as like other DeFi protocols, even other DeFi aggregators. Like I don't really see any of that as our competition, right? Definitely not the protocols we integrate, definitely not even other aggregators. They're all so small and insignificant, right? The real competitor, the real thing we need to beat is like treasuries, right? There's so much money in treasuries, and that money is just idly earning a safe low rate, and they're super happy with it, right? How do we get some of that money to look at DeFi yield again as an asset class that's viable for their use case, right? And so Protect is sort of trying to go head to head with US Treasuries in terms of like its risk reward, right? It's like lower rate. It's definitely not the highest rate you can find in DeFi, right? It hovers around anywhere from 4 to 6% since we launched it, more or less. Rates are a little low right now, so it might go higher in the future. But it's like completely protected from all the DeFi risks that kind of keep people away from DeFi, right? So hacks, Oracle issues, bad debt. There's a lot of things that can happen within DeFi. It's becoming more and more solid. It's happening less and less, but it's still a risk that people want to feel like they have 100% protection from it. They're not okay with 99.9%, right? They need that at 100%. And so how do we get them to that is a tough challenge. And, protect's kind of the first step. It still needs more work and there's more to be done. But, if Fed rates go down, let's say they go down from 4 to 3.5 or 3 over the next year, and DeFi protected rate is like LULO's protected rate is at 5. Suddenly all these people are learning 3% in treasuries, and now like DeFi has become like a more mainstream thing, and we'll look at LULO protected and be like, yeah, maybe I'll go earn 5, right? Or maybe they'll look at LULO boosted, which is the counterpart to protected, which is earning much more, 8, 9, 10, and go there, right? And I think that's like a more broad vision of like, that's what we need to actually win to like make this like a really big thing.
I like it. Yeah, that makes a lot of sense. And I think you're really well positioned for that, because I do think that's the way we're going, that more people will trust DeFi as the ecosystem matures, especially on Solana too.
Yeah. It's all our jobs. That's why I don't really see everyone as competitors. Like everyone needs to build cool things, and like as an aggregate, we'll gain trust as an ecosystem, as an industry, as an asset class. Really, is how I think about it. DeFi yield needs to be more trusted as an asset class, and LULO's just packaging it up and making it simple, right? You got like a low risk option and a high risk option, and you can be exposed to this like new asset class. And like our goal is to package it up and like distribute, try to get wealth from people in there, try to get funds in there, try to get people that have never used DeFi in there any way we can.
Yeah. You said something that made me think about one of my questions here. You said that like it's all of our job to build cool things that people want to use. And one of the things that's really cool about LULO to me is that you're uniquely poised to benefit from new things that come out on chain, like new wealth and yield opportunities. Like if there's a cool new yield product out there, let's say like Terra 2.0, but it doesn't blow up, it's like 20% on your stablecoin or whatever. You guys can benefit from that by routing stables to it. So are there any new sources of yield on the horizon that you're seeing that you're excited about?
Yeah, Terra 2.0 is a bad example, I would say.
Yeah, maybe I shouldn't have said that one.
Athena's a good example, I would say, right? Athena's like a higher yield. It's got more risk because there's like more, in my opinion, there's more price risk, even though they say it's delta neutral. There's definitely price risk and market risk in there. But that's a good example, right? Delta neutral strategies have become very popular. People like to do those. It earns more than like the lending. Sometimes, not always actually, and sometimes they can become negative yield if when the market turned around, and by that I mean went down really hard like 2-3 months ago when it kind of had a little mini crash there. The delta neutral strategies actually lost money, right? And so everyone that was in those, thinking they were outperforming lending, they were not. They were losing money, and a lot of aggregators and other people that were using them had negative days, right? And so my point being, you have to be a little careful about it. Like I think for LULO specifically, our value prop is we are the most secure way to like earn with DeFi, like the most and the best way to do it if you're looking like long term, like a longevity point of view. And so we take as minimal risk as we can. So we only use like overcollateralized lending so far. We're adding a few more. And then we'll start looking at like delta neutral, we'll start looking at other things, but I don't really want to like try to get into the game of like LULO is the highest APY, because there's always a way to earn more in DeFi, right? We're never going to be the highest APY. If you want higher APY, you can go to Camino, multiply, boom, you're earning like, I don't know how much it would be, but more than LULO, right? You take leverage, you take risk, but you earn more. And so I think for LULO, our sweet spot's like, here's a place where you don't have to take a lot of risk and you can earn a good rate. And you can kind of like forget about it and not worry about price, not worry about the market, not worry about anything. It's just gonna like keep going up steady and slow, right? And I think we need those type of products in DeFi as well. We're missing that. It can't always be like insane stress and up and down and risk. Like it's just like not scalable, right? It's just like it's tiresome for me personally. I know a lot of people that build in crypto and have money in crypto and earn in stablecoins. They don't want to put their like payroll into like, or their runway into like, leverage loops. It's like not a good financial move, right? So But yeah, I
That
mean,
makes sense.
you're totally right. The more new cool things that come out, Lulo can always aggregate them. We're like protocol agnostic. It's like the cool thing about it. You know, we go with the flow. Maybe there'll be new strategies in a few months that are like super cool, and we add those. Yeah.
Yep. Do you have any plans to go multi-chain?
Yeah, multi-chain is something we want to do because, you know, I kind of think of Lulo as, even though it started on Solana and the current version is really only possible on Solana, and Solana is, I would say, our home for sure. You know, our users, like, my allegiance is not to Solana, it's to my users, I would say, right? Like, number one is my users. That's who I care about the most. That's who, at the end of the day, pays the bills and keeps everything alive. And so I go about what they want. And what I found is, like, our users come to Lulo because they want to earn the best rates in DeFi, period. Not the best rates on Solana, the best rates, period, right? And so if there's opportunities on ETH, SUI, things like that, I think it makes sense for Lulo to start integrating those and, like, also give, you know, our users, you know, access to all those rates from one place, right? That's what they want. So, you know, in general, like, the rates are pretty similar across ecosystems. So, you know, there has to be, like, good opportunities. But there's some cool, you know, ETH has some really cool protocols like Aave, Morpho, Pendle, like, these are all very cool protocols, right? With a lot of, like, cool features and good yield. And so most Lulo users want to, like, also be able to access those.
Mm-hmm. Yeah, that'll be interesting because, you know, I don't really touch Ethereum at all. And I think a lot of Solana people are in that boat too, where, I mean, a lot of us don't even have, like, funded ETH wallets that we keep track of, you know, so.
Yeah, I think that's right, though. But I think that's kind of why Lulo is so great, because nothing will change from your point of view. You'll still go into Lulo with your Solana wallet.
Oh, that's how you're planning on doing it. I
you'll
was
be
thinking,
able-
like, you'd have,
No,
like, an ETH
no,
Lulo
no,
and, like, a
no,
Sol.
no, 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 no. The value prop of Lulo is you go to one place and you earn from everywhere, right? That's our product. If I had to summarize it in one sentence, you go one place, you get everything, right? So it wouldn't make sense to create two separate experiences. That goes against our ethos, right? So if we do it, it would be, I think, a much more, like, cohesive experience, ideally.
Thank God. Save me from bridging to ETH, Daniel. Please
Yeah,
don't
no
make me do
one
it.
wants to bridge, right? But if I told you, hey, tomorrow, like, you also earn from Aave, you'd be like, oh, great.
Sweet. Yeah.
You have
Great
nothing
idea.
against Aave, right? Like, for
No.
people, it's not like they hate ETH; they just hate bridging. That's the thing.
Yeah.
Unless you're
Exactly.
like, there's some, like, crazy maximalist. I personally think it's an erroneous mindset to have, especially given our industry is so small. And again, our competitor is U.S. Treasuries and, like, TradFi. It's not like ETH; it's that. So yeah, we'll see what happens. That's sort of how I think about it, though. But, you know, it's not that easy. And like you said, like, ETH has, like, more gas costs. Like, it's not as simple as, like, hey, now we're plugging into Aave, right? It's, you know, there's a lot of complexity there. Bridging is a risk. Gas fees are higher. The protocols don't work the same, right? ETH protocols work differently than Solana protocols. Everything is different. So it's a challenge.
Are there any plans to also host other assets? Like, could I lend out Solana on Lulo one day, and then you guys reroute that?
You can do Solana today, actually. We do all the stablecoins and then Sol as well. And you can lend Sol. The thing about Sol lending, since we've started, it's almost always been worse than staking. So when people would come to Discord and ask me about Sol lending, I would usually actually just tell them the truth and be like, hey, you should just go stake with Jito, right? Like, just go do that. You'll earn more. It's going to be safer. Like, it's just, like, net better. It's, like, better in every way, essentially, than using Lulo for this. Right? Because I try to,
very
like,
honest of you.
I try to be honest, yeah. And I don't mean that in, like, a moral way, but that's, like, the best way to run a business so they trust you and come back with stablecoins, which is what I want them to do, right? So it's still a capitalist approach, but it's more pragmatic.
Yeah.
But lending rates have been going up for Sol. Actually, the other day, MarginFi, I don't know what they were doing or what was going on. Like, I think some trading spiked and, like, they changed the rate curves and stuff. But, like, they were beating staking by quite a bit, right? Staking's, like, at 7%, and, like, their lending was at, like, 15, 20% for a bit. So I think slowly as the staking rate comes down, right, there's that vote. I forgot what the number of the thing was, but, like, there's a vote to, like, reduce inflation. I think that's going to come up again at some point and pass, would be my guess. I think it'll happen eventually. Mm-hmm. So staking rates will come down, I think, over time. And lending rates will probably go up with restaking and all these things. Like, they'll naturally kind of go up. There'll be more demand for, like, borrowing Sol. I think eventually you'll see where like lending and staking will be competitive with each other at least, and so then it'll be interesting. I think the Sol LULO thing will be more interesting at that point.
Yeah.
And then other assets besides Sol, like meme coins and stuff, like
when can I earn yield on my fart coin?
Yeah, I mean, I get, like, in principle, I get it. It would be nice. But, like, the yields on meme coins are zero because no one really borrows meme coins, right? I mean, maybe, like, a big short for, like, a short period of time or something. But, like, in general, most of those assets don't have good rates because no one really borrows them, right? The borrowers who are paying and making all this work are borrowing stable coins. That's what they want to borrow. So, for the most part, stable coins is what makes sense. Yeah,
that makes sense. Yeah, let's talk more about stablecoins. So, I mean, given that LULO is based on stablecoins, I'm sure you're very tapped into that ecosystem, and you maybe have some views on where stablecoin adoption is going and what that might look like in the future. So, I play with this idea, and I'm curious for your thoughts. Do you think that yield-bearing stablecoins will overtake non-yield-bearing stablecoins like USDC and USDT in market cap and usage someday?
It's a tough question because there's so much angles to it. So the first thing that comes to mind is they're trying to pass some stablecoin regulation in the U.S. and it has not passed, but there's been drafts that have like come out of like how they're thinking of writing these bills, and like maybe it's changed since I haven't kept up with it the last 2-3 weeks, but like the last time I read it, like they were trying to make it so stablecoins could not be yield bearing, which was interesting.
Yeah, I heard some rumors that Circle was behind. I believe it was the Stable Act that banned yield bearing stablecoins. I think it's because they are kind of shitting themselves that, you know, if a yield-bearing stablecoin does become the norm, no one wants to hold Circle, and then their whole business model goes out the door.
That's true. That's true. The main competitor to USDC is USDC, but with yield, right? Which is like how, there's a couple of them around, right? There's like Ondos. Yeah, they usually use treasury yield, right? And they give you treasury yield.
Yeah.
So I think, let's assume it does. They remain like legal and they can happen. Like, I think probably yes, but I think the battle then, which is the battle that I'm fighting, will be, do you want TradFi yield or do you want crypto native yield, right? I think that's going to be the real choice people will have. No one will want no yield, probably, right? There's no point, essentially. So it'll be like, do you want to earn the treasury rate or do you want the LULO protected rate? Those are going to be the choices.
Could there be a choice of both, where I have my yield-bearing stablecoin that's earning the treasury rate, and then it's also powering a bunch of DeFi, and people are borrowing it?
That's true. It could be, yeah. That could be. People would be needing to borrow it, but the thing is, we'll have to see how that works out. Because one of the reasons people borrow at higher rates than treasury is because there's no sense of like I'm losing yield by like borrowing this, because there's no yield to it like in USDC. So once there is yield to these things you're borrowing, that's like a cost that you have to factor in. Mm-hmm. So it's got pros and cons, I guess, for borrowers.
That's actually a good point. I didn't think about that. Yeah.
So I don't know how it'll play out. It's a good question. I don't know. Regardless, like for LULO, it's like we offer the best crypto native yield, right, on stables. That's our mission, right? Whether they have some base yield to them as well, it could happen. Yeah.
Nice. Yeah, I believe it's the Stable Act that says they're not allowed to have yield, and the Genius Act says that yield-bearing stablecoins are allowed, and that one's actually much more likely to pass, according to my research.
Oh, interesting. Yeah, the banning of yield-bearing is like, it definitely would be good for Circle. I can kind of understand it, but I think the move would be to like more like regulate what yield-bearing means, because the thing about yield-bearing stablecoins right now is that everyone calls themselves a yield-bearing stablecoin. And first of all, none of them are stablecoins because they go up in price. So people don't even have the right word for it. Most of these things are stablecoin like LSTs, aka hedge funds, right? And the problem is you buy one of these stablecoins and it's actually underneath the hood some hedge fund where they're doing delta neutral, they're doing this thing, they're doing that thing, they're doing all these other things. And you might not know what they're doing with your money, right? They might be putting it in Terra 2.0 for all you know, right? And you might lose it all. So I do think there's need for regulating what yield bearing means, because otherwise it'll be abused. People will just like promise things and then it's a black box, and then they take big risks and you thought you were in a stable coin and actually you're invested in, triple leverage looped, backed by like emerging market debt stable coin, right? And like that's not good. That's gonna end badly for people usually. And we've seen that, right? We've seen those like on Solana. There's a couple, right? And they end up blowing up usually. And people lose money.
Yeah. Is there anything that excites you about stablecoin regulation?
Oh, I mean, excite is a big word. I would just like it to be clear. I think that would just help everyone. I do think once there is more clear regulatory rules around stablecoins, it's gonna explode in terms of like everyone's gonna like. There's gonna be a massive gold rush for stablecoin dominance. I don't think. A lot of people disagree with me on this. I don't personally believe in the future of like there's gonna be tons of stable coins. Like there's a lot of projects out there that are like banking, I think, on a lot of stable coins existing. I think there's gonna be like one or two max that win. Maybe I'm wrong on this. I could be wrong. Maybe it gets abstracted enough where it feels like one, but there's actually a lot. But my gut says there'll be like one winner, kind of, right? And like USDC is like clearly that one here in the US, USDT outside of the US essentially, right? Like those two. There's DAI, which is like the third kind of black horse, but it's very DeFi native specific in my opinion. It's gonna be hard to beat those guys, I think, right? Like USDC could just add yield, right? If it's really like, if I was Jeremy in charge of Circle and like, okay, now bills passed, there's yield bearing stable coins, I would be like, okay, well, we have to start offering yield, right?
Yeah.
So yeah, we'll see. We'll see who wins. Maybe there's a BlackRock stable that wins all of them, right? Like whoever has the distribution will win, I think there.
Yeah. And you said these guys are hard to beat, and I definitely agree with you because Tether makes like so much money. They can just throw money at all kind of incentives and experiments. Like they threw some money at the Plasma chain, the stablecoin focus chain. Have you seen that?
No, I haven't read on Plasma. I've heard of it, but it's on my research list and I haven't gone to it. Stablecoin only chain. There's a couple of those coming up now. Yeah. I don't really get those. I'm going to be honest.
I don't really get them either, because one of the like big things that gets people excited that I hear people talk about is like the zero fees for stablecoin transfers. But it's like if you go on any high throughput chain, it's basically free to transfer
it's pretty
anyway.
Much free on Sol,
And then you have all the exactly, and then you benefit from all the things that exist on the chain already. Like on Solana, you have LULO that taps into all the DeFi to get you yield. But like on Plasma, if there's not a lot of DeFi happening, then you don't have that, and it's kind of like, why not just use it on a different network?
Yeah, and another thing to note here, when you say DeFi, the yield that we offer, LULO, and we don't generate it, right? We integrate these protocols, but like all the yield comes from people borrowing stablecoins against something. Sol, Bitcoin, meme coins, whatever, LSTs. It's mainly LSTs. That's like the biggest one, right? So if your chain doesn't support that, how do you generate yield? Like the number one use case for yield borrowing, right, is borrow ETH, Bitcoin, or Sol for stablecoins. That's pretty much, I would say, 90% of the yield on DeFi is just that, pretty much. Maybe with complex things around it that make it seem more advanced than it is, but that's really it, right? Even perps, you're putting Sol, the exchange is giving you essentially margin, which is letting you borrow against it essentially to trade, right? It's the same thing, right? So if you don't have any of that, like where does the yield come from, right?
Yeah. And I don't know. I think it'll be kind of a distribution game. If they can get enough people using it, then great. Because like a lot of people use Tron right now to do stablecoin transfers.
That's true. Yeah, maybe the focus is payments, and it's not so much about DeFi and yield. It's like I just want to be like payments, like sending it back and forth, and like that's going to be the way they try to win, which would make sense, I guess.
Yeah, I'm really excited about stablecoins. They're one of the coolest trends in crypto to me because it's actually something really useful. So I'm excited to see where that all goes.
Yeah, stablecoins are they're definitely useful. I agree. They're useful and non-speculative, right? It's like non-speculative value, and like that's rare so far. It's been always speculative, the use cases, and like stablecoins you can speculate on like crazy yield farms, but besides that, you're kind of just using them because they're useful and there's utility to them.
Yeah, I wrote an article. My very first article was on how can retail profit from stablecoin adoption? Like, how can we bet on that trend? And it's actually really limited for retail. It's like basically you can buy Coinbase at the moment, but nothing else is available to you. Basically, it all goes to venture capitalists and angel investors. Like maybe you could invest in LULO if you were lucky enough to be like an angel investor, and that's one way you can bet on it. But as a regular retail trying to buy stuff that's on the open market, it's damn near impossible to like bet on the trend.
That's interesting. Yeah, I had heard of that before. You're kind of right. I think there'll be more tokens that are probably stablecoin focused coming out, would be my guess, since everyone's kind of like now talking about stablecoins and getting into it and kind of like, people jump on trends easily and like start building stuff. So we'll probably see more tokens, would be my guess. We'll probably see more tokens.
Very true.
Maybe Ondo would be one. I'm not shilling it, but just like an idea, right? Like Ondo, they do like real world assets. They have their USDY or whatever it's called.
Yep.
The problem with a lot of
Athena
these is
token.
or Athena, exactly. There's some. The problem with Athena, Ondo is like, these like come out. By the time they're out to the market for anyone, it's like multi-billion FDV, which, maybe long term is actually pretty cheap if stablecoins go to $1 trillion and Ondo becomes the BlackRock of stablecoins. It's a good deal, but it can feel like a bad deal sometimes. Like, unfortunately, in crypto, like a lot of projects do screw people over with tokenomics and stuff, so people have to be careful. It's a shame,
also
but
mostly,
it's true.
Yeah, it is a shame, and they're mostly governance tokens too. So you don't actually. There's like the way that value accrues to them is not very clear.
Yeah, that's true too. That's like the Uniswap model, where like the Uniswap equity is like accruing a bunch of value now, but the U token is kind of unclear.
Yeah,
it's like a bet that like they will kind of merge it eventually, but they may never, right? And at some point, maybe like people like give up. It could happen, I guess.
Yeah. I think to wrap things up, I would love your spiciest stablecoin take. What's something you believe about stablecoins that most people in crypto would disagree with?
Give me a second. What do I believe?
Or we could broaden it to be any spicy crypto take, if there's not a specific stablecoin one.
I think, yeah, I mean, my take, I don't know if it's a spicy take, but something I see is like, I think, I mentioned it early on, like, I think, and I'll expand on it, I think crypto builders are way, 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 way too focused on each other and competing with each other and like, oh, this protocol and that protocol, and this is a protocol that copies mine but has this small little twist on it. 99% of it is going to die, and if we don't actually start like creating more value and like less scams and actually like pushing things outside of our bubbles instead of thinking only of our bubbles, what's going to happen is all of us are going to be on the street, and BlackRock's going to win, Fidelity's going to win, Robinhood's going to win, Coinbase, which is a centralized exchange, is going to win. They will just integrate DeFi, do their own DeFi thing. They have the distribution. They could easily offer stablecoins, easily offer yield, and they'll just win. And all these protocols and all these cute little things will die off. And I think that's a real risk. I think that's actually a real risk. Personally, I think CeFi is like our biggest competitor, right? I really think like Robinhood is like who I'm most worried about. Like, I'm obviously LULO's small. Robinhood doesn't even know what LULO is probably, but like, what if Robinhood tomorrow starts offering like, their own kind of DeFi protocol that's like, centralized. Robinhood controls it. You can borrow against Bitcoin on Robinhood, get a yield. They would instantly be bigger than most protocols on Solana, probably, right? Maybe bigger than all of Solana. Like, Robinhood Gold has like 30 billion in stablecoins. That's double, or dollars. That's double what we have in all Solana DeFi, right? So I think I would like to see more like talk about that. I feel like we're not aggressive. I feel like we're kind of like, I think we're kind of wimps if I have to make it a hot take. I think a lot of us are kind of wimpy, myself included. Like, we talk about other protocols, we talk about our little bubbles, but I don't see like where's the wartime? Like, we actually need to like move fast and before these guys come in and like just completely crush us, because they will do it. They will do it if we give them enough time. They will do it for sure. So I think there's cool projects that are like doing it. Like obviously Lulo's one. I'm very motivated by it. I think Fuse is another like really good example, like mobile app out there pushing. So we'll see. We'll see what happens.
Yeah, builders got to have that fire under their butt. I
We
saw
need
a
more
tweet
fire,
that you said.
More fire,
You said-
less tweeting.
Yeah. You said that being a startup founder is an endurance race, and you're some guy who's really good at endurance, and you posted a picture of
Alexander?
some old rowing guy.
Dude, that guy is the beast of endurance. You think about endurance sports, and I get it. There's like people that run for 2 days, and there's people that like swim across the English Channel, and it takes them like 2 days to do that, and like whatever, like a week of raft. I don't know. There's a lot of endurance stuff, but this guy kayaked, no motor, straight kayak across the Atlantic Ocean twice, I think. And I think he did the Pacific too at one point, which is crazy. It took him like a year. So imagine for a year, I think it was like a year and a half. For a year and a half, he wakes up, he's in a little kayak. He lives in this kayak. It's an enclosed kayak that barely fits him, and like he basically has one little, he's like sitting rowing, and then he like lays down and closes the hatch to sleep. And they bring him food on boats and stuff, like, so he gets refueled, so he's got that edge, but like that's it. And he just rows, wakes up, rows for 12 hours, the waves, there's no one in sight, the sun beating down on him. does it for a year and a half straight, to cross the Pacific. That's endurance to mine. That's endurance. That's crazy endurance. Like the mind there must be physically, like you just get used to it, right? Like whatever, I row 8 hours a day. Like it ends up being easy physically, but like mentally, that must have been insanely hard.
If he ever launches a company, if he ever launches a company, tell me, because they say to bet on founders, and fuck, I would bet on him. That's for sure.
I would also bet on him. Yeah. That's what it feels like to me to do a startup. It's like the motions of work are not that hard. Like people are like, oh, I work 12 hours a day. Like, first of all, probably you don't. If you're tweeting about working 12 hours a day, you probably don't work 12 hours a day. And like the work isn't that hard. Yeah, you take calls, you work on cool stuff, you build things. All right, it's time consuming, you gotta think, but it's not like harder than like a normal job in terms of like the tasks. What's hard about it is like the uncertainty of day to day. Like, will this pay off? Is this gonna die tomorrow? Does this even matter? Am I making the right decisions, right? And that it's mental endurance and things. There's ups and downs, right? There's like you get a bunch of growth, then you lose it. Then like someone tweets that your project's shit. Then like a competitor launches. Like there's ups and downs all the time, and you just need to like focus and keep grinding on your thing. So it's mental endurance. So that's why that guy's my like. That's who I think of when I'm trying to emulate someone. I think he has good mental endurance for sure.
It's a great place to end it, Daniel. I wish you luck in your endurance race. I am one of your proud users rooting for you.
Appreciate
Shilling
the love
LULO to all my friends.
Appreciate that. That's the best support we can get, sharing it and telling people about it and seeing how they react. And once we have the mobile app, it'll be easier. So definitely tune out for that, because then it'll be super easy to get your friends in there.
Excited for that. Thank you for making it easy to get stablecoin yield. And until we talk next time, Daniel, thank you.
All right. Thanks.